Hello everyone, hi, welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Friends, today we are going to learn a tutorial, a concept that is on accounting principles. You will be learning some of the list of the top accounting principles and what exactly is involved in that. See, accounting principle will matter to you differently if you want to invest in a company or if you own a company. That's a difference. So if you decide to invest in a company, you will look at accounting. I'll write for you. If you want to invest, you will look into accounting principle, right? To see whether the company followed the principles. But if you own a company, in the second case, if you own a company, then you need to do a lot more. You need to report your financial data as per the accounting rules and guidance. So let's first understand what is accounting principles. Now, what are the accounting principles? See, as the name suggests, the accounting principle, as basically the name suggests, the account principles are basically a set of rules and regulations. You can say that are been rules and guidelines that have been by maintaining which a company should report in a financial data. So to understand this, we can talk about the most popular set of the accounting principles. That is the generally accepted accounting principles. If you own a company, then in the United States, you are a public listed company. So here's what you need to do to remain in the most important and major stock exchange. First, you need to learn the GAAP, the general accounting principles, right? Through and thorough. And then what the second thing that you need to do is to adhere, you have to comply with the GAAP while reporting your financial statement. So I'll just write comply with the GAAP. So if you don't take the above steps, then you won't be able to allow to be listed on the major stock exchange in the US. Now let's go into a bit detail and about what are the accounting principles. See, what exactly is GAAP? Understanding GAAP will help you to adhere to the most common set of the accounting principles. Let's understand this GAAP briefly. See, GAAP is a set of rules and guidelines, you can say. GAAP is a set of rules and basically guidelines that the company need to follow while reporting its financial statement. GAAP is basically created to ensure that the financial statement or financial reporting remains transparent, you can say, and coherent throughout the process. And it also ensures that the financial reporting done in one organization remains consistent with the financial reporting done in the another company. The fascinating thing about the GAAP is it is not similar to all the geographical location. As per the region and the industry, GAAP is implemented and followed upon. So in the United States, the SEC ensures that the financial reporting is done by the company and is followed as per the GAAP. The publicly traded companies in the United States must comply with both the SEC and the GAAP, right? Otherwise, it wouldn't be possible for them to remain publicly traded. Now, what exactly is IFRS? See, you can say the GAAP is not being followed in many countries. That is the US GAAP that we are talking about. It is not following in many countries. That is why we also need to talk about the IFRS. See, in the US, GAAP is being followed in many countries. That's in US basically. Other than the US, okay. In case of the financial reporting, IFRS helps basically public companies to prepare and report the financial statement in all over the world. Since similar IFRS are set for the entire world, it becomes easy to implement. And for the investors also, the comparison between the company becomes significantly easier. So the auditor also basically over here, I'll just write for you, auditors. The auditors also get a global standard to adhere to whenever they verify the financial statement of the companies prepared by following the IFRS. See, IFRS is not like GAAP, the US GAAP. IFRS doesn't change as per the region. Rather, IFRS has a general public guidelines or general guidelines for the preparing financial statement. But IFRS does not have any industry specific financial reporting. Make sure that. Let's understand few of the list of the accounting principle. The first one is accrual principle. This is really important. The first is the accrual principle. See, this is one of the most common accounting principle. It says that the company should record the accounting transaction in the same period that it happens, not when the cash flows was earned. Like for example, let's say the company has sold products on credit. So as per the accrual principle, the sales should be recorded during the period when the amount or the money would be collected. The second principle, that is the consistency, or consistency is the next principle. Now, this is the another accounting principle which is commonly followed by all the organization. As per the principle, if a company follows an accounting principle, it should keep following the same principle until there is a better accounting principle is found out. So if a consistency principle is not followed, then the company would jump around here and there, and the financial reporting would turn out to be messy. So for investors also, it would be difficult to see where the company has been going and how the company is approaching its long-term financial growth. The third is conservatism. Just right for you, that is the third. Conservatism. Now, in this case, as per the conservatism principle, accounting faces two alternatives. The one reports a bigger, that is the top-notch companies, the bigger amount, sorry, not the company, the bigger amount, or two reports a lesser amount, right? So to understand this in detail, let's take an example. Let's say that the company A has reported it a machinery that is worth, let's say, close enough to $60,000 as it costs. So now as the market changes, the selling value of the machinery, let's say it comes down to $50,000. So now the accounting has to choose one from the two choices. So first, ignore the loss of the company that may incur on selling the machinery before it has been actually sold. And the second, to report the loss on the machinery immediately. So as per the conservatism principle, the accountant should go with the former choice. That is the report the losses, that is the 10,000 over here, or on machinery even before the loss would have actually happened. So the conservatism principle, greater, it has a greater liability amount and lesser asset amount and also lesser amount of the net profit. The fourth one is basically the going concern principle. Now, in this case, as per the going concern principle, it's accepted that a company would go on operating for as long as it can be in near or a foreseeable future. By following the going concern principle, a company may defer its depreciation or similar expenses for the next period of time. The next is fifth, that is the matching principle. See, matching principle is the basis of the accrual principle. We have seen before, as per the matching principle, it's said that if a company recognizes and records revenue, it should also record all the costs and expenses related to it. So, for example, if a company records its sales or revenue, it should also record the cost of the goods sold and also other operating expenses. Sixth is the full disclosure. That is the full disclosure. Now, in this case, as per the accounting principle, a company should disclose all the financial information to help the readers see the companies transparently. So, without the full disclosure principle, the investor may misread the financial statement because they may not have all the information available with them to make a sound judgment. I hope you have got a clear idea regarding all this accounting principles that we have gone through. Accrual, consistency, conservatism, going concern, matching concept, and the full disclosure. And it is really very important for all the investors to look into any financial statement. They need to see what exactly they have followed. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.